I tell you, Sarah, I thought you used the perfect word, which was soothing, and I thought Jay Powell did a pretty good job. In the past, from time to time, he's said a few things he probably shouldn't have, or the tone was maybe not all that great for the market. But I think he was soothing, and I think that the market fully expected the series of rate hikes. Obviously, the market expected the 25 basis points. And you could tell the initial reaction when you look at the dot plot, and basically, more of their projections were showing a greater magnitude out this year and for the next 2 years. And so, I think that was why initially the market pulled back and was negative very briefly. But overall, I think, he's right. Labor market's great. Interest rates probably aren't going to go up. Let's say the yield on the 10-year, a whole heck of a lot higher than where it is now. Consumer spending should be good. We lowered our GDP number recently, but still it's over 3%. So I think there's a lot of good things going on, and having the Fed funds rate up higher, that's not going to kill the economy, I don't think.
It says a lot, Scott, that you think it's soothing to hear that every meeting is a live meeting for interest rate hikes, and that the Fed talks about significantly shrinking its balance sheet, and that's okay with the markets. But I guess it speaks to how far the market has gone into pricing all of this in. Do you trust it, though?
If we would have dumped that on the market.
Tech?
I think so. Sarah, that we've liked tech. Clearly, tech has been an underperformer here. We like communication services. That's been an underperformer as well. But, we see good profitability there. It's been a relative underperformer. We would call it an opportunity. So I think you do need to take advantage of this. And one of your previous guests just said, if your view's out more than 12 months, this is a good spot to buy. And we would agree with that. I mean, if your time frame's 3 months or 6 months, well, what's Putin going to do next? I mean, we don't know, but that's probably going to affect the next 3 to 6 months. But when you look out 12, 24, 36 plus months, you have to take advantage of relative underperformance and just absolute underperformance. We're 10% off the all-time record high. We haven't done that for a while. We've been a little bit lower, but for us, the market's going to be higher at the end of the year.